Thanks for joining David, Kevin, and myself for the market update for the month of August. We hope everyone enjoyed the beautiful weather. I know the kids are heading back to school. August was an incredibly interesting month. There were so many things that happened, so I think you're going to be really interested in listening to the guys to explain what went on. The Canadian market, all the markets were actually pretty good. The Canadian markets measured by the S&P TSX was up 1.02%. The U.S. markets, as measured by the S&P 500, was up 2.28%. And Europe and Asia markets, as measured by the MSCI EAFE, was up 3.02%. So overall, markets ended really well. I'm going to pass you over to the guys. Again, if you ever have any questions, please don't hesitate to give any of us a call. Off to you guys.
After getting off to a bit of a rocky start, the U.S. equities markets rallied back and ended the month on a positive note, as Harry mentioned. We saw an increase in personal spending by about 0.5% in the month of July, led predominantly by spending on housing and vehicles. U.S. inflation, however, did stay stagnant at around 2.5%, which continues to align with most economists' expectations. As we've mentioned in previous market updates over the last couple of months, there is growing sentiment in the U.S. that the U.S. Fed is continuing to be able to navigate the U.S. economy through a soft landing. And with a combination of moderating inflation, economic growth, losing some momentum, and a softening labor market, we believe that there is a higher chance that the U.S. Fed will start to cut back rates, possibly at their next meeting, which is on the 17th and 18th of this month.
A fairly similar story seems to be unfolding here in Canada. We've got inflation figures that are coming down. Inflation in Canada is getting down close to the 2% target, which the Bank of Canada is happy to be seeing. As well as our GDP continues to actually be pretty strong. Despite some pockets of weakness in our economy, overall, things are still trending okay. In July, GDP growth in Canada was measured at 2.5%. This is following up on a decent first quarter of 2024, where GDP in Canada was up 1.8%. So GDP growth is a little bit stronger than maybe some economists had forecasted at this point based on how tight the interest rates have been in our country for the last couple of years. And just recently, actually as of today, we were filming on September 4th for August's market update, and the Bank of Canada has met today on September 4th and done their third interest rate cut of this year. So they've cut interest rates down to 4.25% now. It's their third quarter point cut. So we're starting to see, we have seen some weakness in the local or domestic real estate market here in Canada, and that's been in large part due to the tight and restrictive monetary policy that we've had over the last 2 years, and that is clearly starting to soften. So we expect to see real estate start to firm up a little bit, especially residential real estate here in Canada, and overall the economy continues to be doing pretty well.
So even with the short-term market volatility that we saw at the beginning of the month, lo and behold, equity markets bounced back and all went positive by the time the month ended. And even year to date, the figures are extremely promising. The S&P TSX in Canada is up over 11% year to date. The S&P 500 in the US is up over 18% year to date. These figures continue to provide proof that by staying calm and staying invested and not listening to the outside noise of different short-term volatility triggers that are going to happen always, by enduring through those and pushing through, that you will see positive returns.
As always, if you have any questions or want to reach out to Harry, Kevin, or myself, please do feel free. We look forward to hearing from you.
Take care.